Apartment building owners, a newer roof, not having a claim before, and great tenants can lull you into thinking the risk is very low. But apartment buildings are one of the business types with the most claims in the entire insurance industry. Ask any insurance professional that you know. Tenants start fires and can be extremely litigious. You have high foot traffic and people spend upwards of 20 plus hours per day inside your property. In this video, I'm going to show you the exact coverages apartment building owners need before you start shopping for quotes and some example pricing to give you an idea of what it costs. I'm Austin Landis and I run a commercial insurance agency with real estate clients across the US. Insurance works very well for large businesses because they have a lot of expertise and great insurance people at their disposal to help them avoid these traps. I create these videos to give smaller and mid-sized businesses the tools and the resources to never get taken advantage of by insurance companies. There are so many traps and pitfalls that apartment building owners fall into on their insurance policy. They get hit with co-insurance penalties after construction costs jump. They have to pay for code upgrades out of pocket because ordinance and law coverage was taken off their policy. Water damage isn't covered because the carrier added an exclusion, and a million different things. On the liability side, the fine print can quietly pull the rug out from under you. Assault and battery exclusions can leave you hanging after a parking lot incident, or animal exclusions that turn a dog bite into your problem. Before you even look at premium, make sure you have a list of requirements that meet your objectives, then look at the best quote that meets those requirements. There are too many things to review in this video, so I included a checklist that you can download detailing what coverage options you have and what you should require out of any quote so that you can make a more educated decision. Here's my method for apartment building owners. I secure the property coverage first. This is the policy that is the highest cost, the most risky, and the coverage where a lot of exclusions will be added so that claims don't have to be paid by the insurance company. This pays for property damage that occurs to a building that you own. For example, if a wildfire were to damage or burn down your building, this policy would pay to replace it. I seek out a policy with agreed value or a waiver of co-insurance tied to the current replacement cost valuation. I want ordinance and law to cover the undamaged portion, the demolition, and the increased cost to rebuild to code. I want business income or loss of rents coverage written as actual loss sustained so that you can maintain cash flows while the property is being rebuilt or repaired. I make sure that we have an adequate amount of water damage limit. If I have to have it limited, I want it at least $100,000 for smaller buildings and more for larger buildings. I want to make sure theft is included as a covered peril and not excluded. I want replacement costs on the roof if it's a newer roof. I want to make sure that the deductibles are not too large for the customer, especially the wind deductible. Once the property side is right, I then add general liability, ideally with the same carrier as the property, but not always. This policy covers your premise liability for tenants and for guests. For example, if someone tripped over a curb and claimed that it's dangerous, they will sue you. I've seen claims where the tenant stretches under a ceiling fan and gets cut and then just sues the landlord or the apartment building owner. With general liability, some of the exclusions are more difficult to get away from if you're at a super high risk or excess and surplus lines carrier, but keep an eye out for the following. The first being assault and battery limitations. If it's excluded, I always try and add back some kind of limit for this coverage in case there's a fight or kind of a shooting on the property and you're blamed for it. Also, an absolute liquor liability exclusion, which could provide defense costs if someone was overserved on your property and somehow you got roped into that lawsuit, and animal exclusions where if a dog bite happens on your property. I also look for any exclusion that I'm unfamiliar with and check it to see if there's any significant limitations in the policy. After you've looked through many of these policies, you'll start to notice ones that just stick out that you don't normally see. I always check those. And once you have a good policy together, I have a couple of tips. One, if you want a cheaper policy, instead of lowering the building value, increase the deductible. With penalties, lowering the value benefits the carrier more than it benefits you. Your coverage will go down faster than the premium does. Increasing the deductible creates more predictable claims outcomes, and you will probably still pay out less per claim as a result. Always require your tenants to have renter's insurance and treat it as your first line of defense. If they don't have liability insurance, your policy will end up paying for all of their issues. Additionally, if they leave their sink on, that can cause water damage. If they have renter's insurance, you can try and collect from their policy before it hits your insurance policy. Keep records of all your construction projects, especially roofing projects. Many policies will depreciate the roof if it is over 10 or 12 years old. Being able to prove that the roof is newer will come in handy if any claims adjuster claims that the roof is older and tries to put it on an actual cash value basis. If you have protective safeguard endorsements that are on your policy, it certifies that you have certain protections on the building, such as central station burglar alarm or a fire sprinkler system. If you accept the discount from having these items and at the time of the loss you do not have them or they were not well maintained, the insurance company can deny the claim. Make sure that if you have them on your policy and accept the discount, you are 100% sure that you comply with this requirement. And lastly, get a catastrophe model for your property so that you know what the underwriters are looking at. You should be able to get this from any agent that specializes in the real estate space and looks something like this. It puts your property through a risk modeler that tells you what claims are most likely based on your area. Real estate is one of the few industries where we regularly see catastrophic full limit losses. We have multiple open claims right now for this exact thing. A couple for tornadoes, some for wind damage, and we had a fire completely burn down a $14 million building recently. It is completely random, but this means that you need a serious policy from a serious insurance company, and the effort to find it is 100% worth it. I'm including a concise checklist below. Hand it to your preferred agent or carrier, and it'll help you have more meaningful and strategic conversations about your insurance. The price gap between strong coverage and bad coverage is usually very small until the day that you have a claim. A quick word on pricing expectations and how to present yourself to the market. Carriers are going to look at construction, like frame versus concrete, and protection, like sprinklers and alarms, the age, the condition of roofs and systems, your average rent amount, prior losses, vacancy levels, and their experience in your area. You can't change geography, but you can document upgrades and security features, show a maintenance plan, keep service records for alarm and sprinklers, and validate your current building limits with current data. That's how you earn better terms without sacrificing coverages that we just locked in. Here are some real examples of pricing. Like in the state of Maine, we have a building value of $1.1 million, a loss of rents coverage of $125,000 with a deductible of $10,000 with a 2% wind and hail coverage. The property premium is $9,800. The general liability premium is $1,401. That leads to a total annual premium of $11,205 or a monthly payment of $933.75. The second example is in the state of Virginia with an apartment building value of $2,268,000 or a business income limit of $200,794. The deductibles are $25,000 and 3% for wind and hail claims. The total annual premium is $10,801 or monthly that is about $900 per month. My third example is also in the state of Virginia with an apartment building value of $2.4 million, a loss of rents limit of $285,636 with a $25,000 deductible and a 3% wind and hail deductible. The total annual premium for this property is $10,705 or a monthly payment of around $892 per month. The last example is in the state of Maryland with an apartment building insured value at $1.5 million and a business income limit of $48,000. The deductibles are $10,000 and 2% for wind and hail claims. The total annual premium for this property is $9,329, which is a monthly payment of around $777. If you're an apartment building owner and you want your insurance handled the right way, grab the checklist below, start a quote on our site, or use the link in the description to schedule a time on my calendar to talk.